Hello guys, are you aware that if you have 1 million naira, 1 million naira in your savings account in the month of January, by December, following the current inflationary rate, you would have lost over 159,000 naira. So the actual value you will have in your account will be about 841,000 naira. Why? Because the current inflationary rate is about 15.9%. They call it headline. We have headline inflation, we have food inflation, we have core inflation, but we go with the headline inflation. You will lose this in the course of the 1 year. So actually, the balance, the purchasing power is just has been reduced to 841,000 naira because you kept your money in a savings account. Of course, it is savings. We encourage savings. Savings is part of the journey towards wealth building. But the first thing is that when it is there for too long, it has defeated its purpose. So once you have here, you have the money, or perhaps you're also investing in any investment that is giving you less than the current inflationary rate. You are not doing yourself any good. In fact, you are shooting yourself on the foot. So that is why this video is coming today. That is why this training is coming today, that you take the due precaution. And we are going to be sharing investment savings opportunities, investment windows where you can put your money and it will be well ahead of inflation. At the end of the day, it is still up to you. It is all about your goal, it is all about your philosophy, and it's all about your risk aversion level. It is wealth portfolio builder. Today we want you to like, we want you to share, we want you to comment, because we are going to give you the 7 investment opportunities where you can put your money. I will be right back. Go nowhere. You are welcome back. Today we'll be looking at 7 fixed investment income, 7 fixed investment income options. So we have options that we can say, okay, these are what I am going for. 7 fixed investment income options. It is left for you to decide which one you are going to invest your money. But the first thing we need to understand is what is investment income. What is savings investment income? Simply put, in a layman's voice or language, is that you lending me money for me to return the money at an agreed date with an additional payment for usage of that capital or that money that you have given to me. Sequano, finish. That is just the full definition of that savings investment income. It can be for 1 year, it can be for 3 years, it can be for 2 days, it can be for just 24 hours, but you are giving me money and I will return it for usage and I will pay an additional money. So that is fixed income. So the question now, why this video, is that you need to save, that is 1, and you need to invest, that is 2. But if you are investing or you are saving, and while you are saving or investing, Mr. Inflation is swallowing your money by about 16%. Currently it is 15.9. It is swallowing your money by about approximately 16%. Then that investment or that savings is not an ideal or a wise investment. So today we'll be looking at these 7 fixed investment income. Number 1 is high yield savings investments. Number 1, high yield savings income. This one you can get it from so many of our fintech. Thank God for fintech. You can put it, whether it is OPay, it is Money Point, it is even our stockbroking firms, Bamboo, Atlas. You can put your money there, and at the end of a tenure, you get quality returns from your savings. So it is way of encouraging building the culture of savings. And of course, it is still below the inflationary rate, but it is something that anybody can start. But the caveat here is that you need to be careful. Don't leave too much money in such an account, because you need to ask questions. Who are the owners of this company? Is it well regulated? Otherwise, you may be exposing yourself, and which is not ideal. I have a friend who told me that he has over close to $500,000 in an OPay account. I am not castigating OPay, but I'm saying that ensure that once the money has attained to a substantial amount, move it to an investment that you are planning, or for something else, or to a bigger place where it is well regulated, where you can be able to track it and monitor it. The next investment option that we are talking about is what we call MMM. This time around, it is not MMM per se, it is money mutual market. Money mutual market. Money mutual market. So this one, the stockbroking firms, virtually all of them are into it. And listen, back to the first one. Entry is very easy. With as low as just minimum balance, perhaps 500 naira or maybe zero naira, you can start. The same thing applies to this money mutual market. Entry is very, very friendly. With as low as 5,000 naira, you can open. You can go to Stanbic IBTC and you can open. And the beauty of this money mutual market is that it is regulated. One, it is stable. Two, it is sustainable. Three, it is liquid. So you have so much advantage then when you go into money mutual market, and the entry level and the exit level is very, very friendly. But the thing is that the interest is not guaranteed. They will tell you they were giving maybe 13%, maybe 14%, maybe 15%. It is not a guarantee, it is a target. Whether it gets to that place, fine, and if it doesn't get to that place, good. So if you put your money in money mutual market, you can call it back at any point in time, but it is not an assurance that it will outweigh the current inflationary rates. Now, the third investment option that you look at, number 3, is a federal government savings bond. Now, the federal government savings bond is done virtually almost every month. We have for 2 years, we have for 3 years and beyond. So it is left for you, and there are percentages that is being assigned to it. The last one that just finished in this month, the beginning, the first week of each month of this month of June, we have for 2 years goes to about 13.77%, and that of for 3 years goes to about 14.77%. So approximately give or take almost 15% and yet 13% give. And when we put it vis-a-vis, we still discover that inflationary rate is higher than it. But the beauty about this federal government savings bond, it is government no they run now. If Tinubu finishes his tenure and goes, another government comes, so your money is intact. You can always beat your chest and say, Nigeria is owing here and here, Nigeria is also owing me. And the beauty is that once it has been fixed at that percentage, if inflation is dropping, they are not going to review it. So even if inflation drops to 13% to 10%, it is to your own advantage. And if inflation is going up, well, that is business for you. That is investment for you. So that is the number 3 option. Because of our time and because of the complexity and the uniqueness of today's training, we may not be able to go in depth, but I think, and I want to believe that you are understanding what we are trying to say. Then the fourth one that we are looking about is called the Treasury bill. The Treasury bill. Now, the Treasury bill is also managed by the DMOs, that is the Debt Management Office of the government. So, but the difference between the Treasury bill and that of the federal government savings bond is that the Treasury bill, they advance the interest to you, and while the capital, or rather the rest, is paid to you at maturity. So, for example, you invest 1 million naira. The interest of 18%, if that is the rate given, is given to you upfront, while the remaining balance is paid to you at maturity. So that is the difference between the Treasury bill and the federal government bond. And of course, the Treasury bill is not something they pay quarterly, it is at the maturity. And most times, Treasury bills don't go for full 1 year. Most times, you have them for 91 days, you have them for 120 days, you have them for 64 days. So that is Treasury bill. Of course, the federal government bond is 2 years, 3 years, and beyond. And number 5 is what we call commercial paper. Commercial paper. This one is given to not by government, but by investments by companies like the Dangotes, the MTNs, and perhaps new companies that are coming into the stock market. They want to generate a capital to run their business, and they are regulated by FMDQ. So they are the regulatory body under the government that is monitoring this. And the beauty about this, or the good thing about this, is that it has high returns. But of course, you and I know that high returns come with high risk, because there is tendency for defaulting. So before you bring your money and give to companies for them to do their business because they have tendered commercial papers. You have to be sure who are the owners of this company, how long have they been, what are they into, is their product or their services, whatever they are doing, if their deliverables are something that you know that the people need. You don't just carry your money and give to somebody because he wants to do commercial paper and their story is going to give you 19%, and you heard that wealth portfolio builder is saying you should stay ahead of inflation, then you give to the person only for the person to tell you stories. That will not be your lot in the name of Jesus. Then the sixth investment option that we are talking about is the Eurobond. Now, this Eurobond is like just you giving the federal government loan, but this time around you are giving it in dollar denominated and hard currency. No, you are now stepping up. You are no more going by naira, you are going by dollar. And the beauty of this over so many of them is because you are building an edge against inflation, against inflation. Imagine where you buy, you invest about 15 million naira, and you buy at the current rate is about 1,500. Let's say for $1 is 1,500, and you invested 15 million. So it simply means that, and if you invest for 15 million and a dollar is 1,500, and perhaps the dollar goes to 2,000 naira for $1, it means that you have done about, for that same year, you have done about 20 million. So you have made a profit of about 5 million naira already. And the beauty is that you're also going to be paid back in that currency that you are investing. But of course, I'm a patriot, or rather, I will not support the naira be going down to dollar. It means it has to be able to equate dollar, and it will also, even if it means us buying less dollar to acquire more naira. So that is the beauty of it. So that is for Eurobond. It is an edge against inflation. But trust me, I sincerely hope and I look forward, believing that one day that naira will come down to as low as 500 naira, 300 naira, 200 naira, and we'll be at par. It may not be in our generation, but if we are able to push this ideology of local content and trust and remove nepotism, remove crime, remove evil, Nigeria will get to where God has made us to be. Then finally, we are going to look at the normal fixed accounts with banks. You know, normal fixed account with banks, you fix for 6 months, you fix for 3 months, you fix for 6 years, you fix. Yes, I've seen when we're in the financial institution, you see people that fix for 10 years and thereabouts. So at the maturity, what they do, they just take the proceed. While some were busy rolling it over. So that is also another avenue where you can put your money, but the interest from fixed account is very, very low. In fact, inflation will wipe it out. So give or take, whichever one you are going into, we are just trying to let you to realize that there is high yield income onto fixed deposit, and so much more that because of time and space, we cannot be able to capture here. So whatever you are going to invest, make sure that is above inflation. Make sure you don't keep your money too long in a savings account. Make sure that you are monitoring your investment. You are watching it as it is growing. You are moving. You are diversifying. You don't allow inflation to eat it, and you're saying you are investing. I hope this video has added value, because that is our sincere desire. We have not come to entertain you. We have so many other things to do, but we want to teach you. We want to ensure that we share ideas. And if any of this investment is something you want to go in, you can do more research on it, and then you can move on. The ones that are regulated, that is the one we also encourage you to even look more into and invest. But make sure that you are trying to beat the inflation. It is Wealth Portfolio Builder. We want you to like, we want you to comment, we want to hear your comments, we want you to share, and of course, we want you to subscribe. God bless you. See you at the top. Remain at the top. Keep showing up. You never know when we'll come with quality trainings like this that can put food on your table, because actually that is the essence of one of the essence of investment. God bless you. See you again.